welcome back for TA with Rocky Outcrop. I'm your host, Rocky Outcrop, and this is episode 7. Thank you very much for tuning in. You could be doing anything right now, but you're here watching this, and I really appreciate it. Any likes, subscribes, comments, anything, all absolutely gold dust to me, and I really love it. Looking forward to handing out all those hearts to anybody who comments and tells me how stupid I am. So, okay, let's just go straight into the chart and take a look at it. And as we go in and take a look, I want to point out that none of this is financial advice, and I am not a financial advisor. Always do your own research and your own due diligence before making any financial decisions. Okay, so this is the whole we're in the middle of this saga unfolding of the Head and Shoulders and channel saga. So what's the story? We've got this channel that we've been in since June, and various people in the world will have drawn it in various different ways, and I could sort of demonstrate that just real quick if this will let me. Some people would have drawn it like here using the bodies, and you can see this running along the top of this here is looking like resistance, and you would have had at this point here back in late October, it looked like we'd broken out of the channel. We'd come up and we were about to possibly even break 10,000, and what a great big round number that is. Then we came back down and we were being supported by the channel here, and it looked like, well, we've broken out, we're going to go sideways for a wee while. This is all completely natural and a retest of what you would expect to see, and we were above all of the major moving averages. And of course we know what happened after that. The story is old. This was when we were above the 200 simple moving average, and you might remember back on the 8th of November when many hearts were broken, and we actually broke back down there, went down to at the time potentially just retest the 200 simple or 200 exponential, and it looked like we could potentially come back up above it a couple of days later on the 10th, and we didn't. And ever since then we just continued on this downward trend. Now I'm actually of the opinion that we've never really truly actually left the channel, and if you remember running along here before, that's actually what in my mind occurred just there. And before, if you use of course I've just moved it slightly, you could just undo it a couple of times. There we go. So you can see that actually if it was drawn there using the wicks of these candles, like I'm starting here of course, and coming down, and just various different touches, that actually where we were yesterday was just breaking out of that, and potentially right now we are looking like we are breaking back into that area. Now, is this a retest of it? Of course it could be. I could be out by many millimeters or centimeters or inches on where I've actually dropped this here thing. If it was just here, then we're just retesting it right now. Look how perfect actually that lines up. In fact, maybe indeed that is where I had that before. In fact, I think that's where I had that before. So we're actually just retesting it. But the point I think is being fairly well demonstrated there, that these things are not an exact science, or certainly that our human being brains aren't capable of turning an exact science. There's always an artistic spin on things. So here we are, and we're retesting this. And I thought maybe what we could do is have a quick look at what I said yesterday in the video, just to have a reminder. It only takes 1 minute. We can skip it if you like, and see what it was I said yesterday, because I think that I actually summed up this scenario of what was playing out right now fairly well. And you can see that at the time, around about halfway in the video yesterday, I was talking about whether or not we would be rejected from this on our first pass. And if I just go over to YouTube and go about 10 minutes into the video yesterday, excuse me, at my first attempt, which I don't know, could end up looking like this here. And you say, well, you get rejected on your first attempt, you come back down, you think you're being supported by a channel, but in actual fact you're still within the channel and you go on down. That could happen again, just as it did here, or indeed you go up. You would expect there to be some sort of resistance around here, and for the price to suffer from that in around the 8,100, 200 level, and potentially come back down 8,000, 7,800 without affecting the play of this head and shoulders pattern, for instance. And that would be reflected here as it being rejected by the bullish control zone, but as you'd expect on your first pass, with it potentially going back up again and going into that zone and then staying in there for a while. And of course that's where you want to be, as you can see back there. Likewise with all those low momentum oscillators essentially. So that's what that looks like on that time frame. So there's no. Okay, that'll do. So I think that kind of explained that part of it yesterday, and that's what we saw play out. So to say that this was beyond imaginings would be wrong. We could have easily foreseen this potentially happening yesterday. And what would we have liked to have actually seen though instead? Well, what we would have liked to have seen instead would be for it to have gone up here and managed to remain above this zone, above this line, sorry, this white line you can see, and then to have opened and closed above it. And why? Well, two things. One, 3 or 4 or 10 things, depending on how much you want to actually take into this sentence. But basically, you'd be above the 200 exponential moving average at that point, and you'd also have come back up and retraced up to the 236. And so if this Fibonacci retracement, if you were to take one from the very top, using the wicks from up here down to the head of that head and shoulders, and if the inverse head and shoulders had have actually been a successful trend changing pattern, then, and that actually turned out to be the very bottom, then you would expect then to have a common retrace. You could be able to start using this Fibonacci potentially, thinking about it, if we were to be above that area. And the other interesting thing about this area, of course, is the sort of lack of historical trade in here. We came right down, and you can see actually just drew in another horizontal here with this yellow sort of showing where we are right now. And it's acted as support and resistance in the past. It's been fairly significant, whereas you've not had an awful lot between here and up there at the 9,000s, where you can see these big candles dominate a lot of the price action there, as opposed to having these sideways for months where you maybe be consolidating. So the price doesn't tend to consolidate in and around 8,500, and I wouldn't expect it to necessarily on this time, although of course history just rhymes. It doesn't always repeat itself exactly, but we could pencil in a sort of fairly quicker movement up towards the 9,000 if we do actually go there. And of course then you'd probably be looking as well, like I was saying, for some sort of cascade of positivity to be talking about it in the general market, or positivity. I mean, I don't, and don't take me wrong, I mean purely from a technical analysis point of view, but let's hope that there are no conflicts in the wider world, and that everything can remain peaceful. But certainly things like war and stuff like that are newsworthy events. It's certainly much more than newsworthy than whether or not the Satoshi Nakamoto is Ray Vaughan, or whoever you want to choose, Craig White, or whatever, Craig Wright, all that sort of stuff. That's not news, But whereas as a war, like that's different. So where are we going towards then to over the next couple of days? Well, if we can actually use this channel as support and achieve some upward momentum, then we could see us coming back up into the RSI and the bullish control zone, and that would be reflected in various different ways as well. We'd also hope to be seeing some more volume coming up here, and it would be nice if we could get a nice head and shouldersy look on the volume. Well, there is a bit there, but going up here and taking us back on up to the areas of volume that we've seen when there's more interest in the price, and we get these bigger moves. So you can see, if we were to just sort of move the price action out of the way and draw a quick sort of horizontal line across, you can see there, for instance, that the volume that we've had over the last wee while is still a good distance below the volume of the past. So you can imagine how much more activity, trading is going down, and volatility and everything else could be occurring whenever there's prices, whenever there's volume in those areas. And actually, you see where the amount of volume that we've got currently is right down here towards the bottom. So it's not like we're we're getting out our pens and papers and writing back home to mum, dear mum, the price volume has just gone through the roof. I am now writing to you to inform. No, that's not happening. In fact, what's happening is nothing spectacular, but that doesn't mean to say that it's not going through. So going to go ahead. So beforehand, where we're looking to, we were talking about the head and shoulders and whether or not it's even real, and whether we could play it to the upside or not. And I think that there could potentially be a play to the upside here. but we really do need to see things going our way. If the price comes down here and retests off of, say, the 100, it could still be positive. Even if the price comes down here to the 7,500 level, it could still be positive and could actually continue up. But by that stage, I would be feeling a lot more negative about it, because we are talking about a good $500 solid move down the way, which would be much more enjoyable to short than to be having a stop down here and trying to hang on with our fingernails to a position that's looking pretty sucky. But they could still turn out to be positive, and that could still all happen, because that would be essentially setting in a higher low. What would be way more ideal would be for the price to be sitting in a higher low in within touching distance at least of this channel, but of course ideally above it, and then ideally even more to take a proper attempt at coming up here and making a move up. And if it did, then like I said, there's not as much historical price activity here. Even this here is, we're talking, this is just a period of 10 days or so for the price to go from particularly between these two, this $1,000 move. So there's a lot of possible outcomes in the future around this 8,200 level. And I think that pretty much wraps us up for where we are now. If you were to be shorting, of course, there's shorting opportunities in and around that same thing. This just like I said yesterday, this critical area that we are here actually offers up a lot of opportunity for managing your risk quite easily. It's drawn on for you. You know, you can put your stop losses in and manage risks around pivots. And if you're if you prefer to use, say, a percentage or a fixed amount for your stop loss, if that's the way that you're inclined, then of course that's also handy in and around these areas too. So there's lots of areas of confidence that we could manage our risk off of, and of course that essentially is what trading is. It's not about catching knives and things like that. It's actually about finding areas where you can manage your risk and not finding areas where you could potentially get great gains. Although that's what YouTube and what everybody really who, in my experience, I've ever seen talking about trading likes to talk about almost exclusively are the gains, bro. But in fact, I think if you ask anybody very serious about this sort of thing, they'll tell you that the opportunity in trading actually lies more in your risk management than it does in finding amazing longs and short opportunities for the gains side of things. It's obviously about the gains, but it's obviously about the gains relative to the risk that you'd be taking on. So you're looking for confidence to indicate what the risk is and to manage that risk appropriately. So I think that wraps us up for where we are now, and thank you so much for watching and tuning in again for another technical analysis episode. And then I'll just finish up this one by moving over and taking a quick look at my $10 to $100 trading account over on Bybit and see what the score is there. So I believe, okay, so there's Bybit loaded up, and the price has dropped. In fact, during the duration of this video, it's dropped probably down by $100 as I've been talking about it. And you can see here that I've got a position for 190 contracts long, and the average entry price is around that 8,136 price. Now, where was that on the charts? That's around about where the 200 moving average is, and I actually longed that up above, hoping that would act as support. Now, bearing in mind that I was also aware that it could come down here and test this, and it's my $10 to $100 trading challenge, and I was trying to take on a little bit of risk there with that trade. I'm fully aware as well that the price could come back down here, even as far as the 87861 level. So I'll be keeping a close eye on that, and we'll be more than happy to stop out of that if indeed it looks like that this whole breaking out of the channel move, head and shoulders, and everything else has just been painted on, and it's a liquidity bait for everybody. Because over the last 6 months, the major points of liquidity that have happened have been by baiting people into thinking that we're breaking out of a channel or whatever. And if you're looking at these points here where you're looking for liquidity, and you can see on the volume when those have been coming in, it's been at times, if you remember as well, I had this lower, and it looked like we were breaking out there, but and it looked like we were being supported by it. It looked like we were being supported potentially, and you can see the volume comes in now. Like, you think to yourself, well, what scenario does that really make sense? Well, it makes sense that some people are looking for liquidity, and they have big pockets and big orders that need to be filled. So, absolutely would not surprise me in any way whatsoever if this all turned out to be a big disappointing flan in your face. On the other hand, I have a position that's currently long, so you make up your own mind about what way you think the market is going. I am certainly not impressed by what I'm seeing right now with the price breaking back into this channel. And if we tune in tomorrow and find that that we're actually talking about coming back down here and retesting off this, it is, like I said yesterday's video, that's still within the realms of possibility. And but I just think that having this psychological channel here, because it's essentially what everything is when you're doing technical analysis as well, just changed it from risk management to psychology, but there you go. Essentially that what you're doing too. I mean, we've got this psychological area here, and when you're up at these tops, people are crazy, and when you're in the middle of them, people are much less crazy. You'll probably notice yourself. So if you just think of this as being a sort of a psychology range more than anything, then we want to get away from this this downwards hangover we've had for a long time, and get into a new trend. However, for us to come back in here would not be surprising at all. So I think that wraps everything up, and thank you very much for tuning in. Much appreciated. Any likes, subscribes, comments, all massively appreciated. I love it all, and I'm looking forward to putting hearts on every single one of those comments where you say that I've got a big stupid face and you'd wish that I would go fart myself into oblivion. Thank you very much for choosing to watch me. As always, I'll see you in the next one. I've been Rocky Outcrop. Thank you for tuning in.